Hi guys, in this video I'm going to touch base a little bit on compound interest. Okay, so compound interest is one of the main keys to trading for the long run, for the future, long term. Okay, trading is not about making quick money because as fast as you can make quick money, you can lose it even faster. Okay, it's all about percentages. If you don't understand percentages, then I suggest you look into that because trading is all about percentages. And that's right, as fast as you can win, you can lose it faster. Okay, so we'll touch base a little bit on compound gains over here. So if you don't know what compounding is, it's having a principal amount and let's say $1,000. If you make, for example, 10% on that, you now have $1,100. So let's say you take a trade and you risk 10% again. So if you make 10% on that amount, you now make $110. Okay, so the profit that you make, the amount that you make, even though you're risking the same percentage every time, is increased. So that's called compounding. So I created this compound gain calculator just for my own amusement and I guess also to put things in perspective at times. When I'm feeling a bit emotional about wins or losses, I come back and look at this and it helps put things into perspective. All right. So for the left column here, I've put weeks. I can adjust it to whatever I want, but I've put weeks there. Yellow would be highlighted as 1 month, right? So we got 1 month here, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, and then almost 12. So about 1 calendar year. So let's say you started with $1,000 in your trading account and you make 1% per week on average, right? Maybe some months you lose 2%, some months you make 3. Let's say it averages roughly around 1%. Okay, so in the first week, you trade with your $1,000, you make $10. Great. In the second week, you also make 1%, you make $10.10. Third week, you make $10 and I'll zoom in a bit, $10.20. So you're continually making more, right? By the sorry, by the end of 1 month, you would have made $40.60 if you kept on compounding. At the end of 2 months, you would have made $42.26. So you're always making more. You're making more each month, right? And this is only on 1%. It's not a large amount. 1% is actually very easy to achieve. All right? And that is actually risking very little. It's a very conservative to be able to do 1% a week on these small accounts. Okay, not to say that you're trading with billions of dollars. 2 months, now your account balance is 1,082. 3 months, 1,100. So let's go all the way down to roughly about 1 year. By the end of 1 year, you would have made $612, and that is a 60% gain on your account. That's not too bad. You can imagine if you had $1,000,000 and you made 600,000 for the year. It's not a bad. It's not a bad. It's not a bad return. 60%. Okay. There are many people who have properties and they aim for, as rental properties, they aim for 10% a year, even 12. That kind of ROI, that kind of return on interest, return on investment. Okay, so 60%, not too shabby. But what if you started to make 3% a week, which is also very possible? Okay, I'm not saying that when you trade, that's what you should be aiming for. Okay, when you trade, you just trade your strategy. You aim to follow your rules, and that's about it. Okay, but let's say your strategy is capable of making on average 3% per week. By the end of the first month, you're already up 10% on your account, 1125. Second month, again, again, again. So let's go all the way down to 1 year. So you started with $1,000, and now by the end of a calendar year, you are up $3,000. That's I guess about 300% roughly, a little bit more. That's almost 4 times the money that you've invested, and that's a lot, right? It's quite a lot. That's being quite conservative. So you don't need to aim when you're trading for big wins. You don't need to get those 10 RR trades every time. Okay, even if you're risking 1%, which is a common rule, the 1% rule, and you get 1R, that's fine. You just made your 1% for the week. You're done. Okay, 3%. Some people risk 1 to 3%. Even if you're risking less and you trade more frequently, it's still very possible to make 3% a week, 5%. And just by these small percentage increases, I mean, the amount that you make is significantly more. So starting with 1,000, you almost 10 times your balance, your capital by the end of 1 year. At 7%, it's 25 times, and at 10% per week, that's almost 100 times your original account balance. Okay, so yeah, that's why compounding is so important, and it's something that I think every trader should do to survive in the long run. The money that you need to live, it kind of relatively always stays the same. But as you grow your account, although the percentage that you're making is roughly the same and the risk you are using is roughly the same, the money you're making starts to catch up after a while. It starts off slow, and then it starts to catch up, and you find yourself having all this expendable income. Okay, you can create generational wealth by trading, and it's very possible, um, but you have to risk small. If you risk too much, that is going to affect your compounding. Okay, and why is that? For example, if you had, let's go over here, if you had $1,000, right, and let's say you lost 50% of your account, what do you have now? You have $500. Okay, $1,000 here. So now you have $500 left because you lost 50%. But how much do you have to make to turn 500 back into 1,000? You have to make 100% to turn 500 back into 1,000. So you see what I mean? You just took a loss of 50%, but now you have to do 100%. And which is double. It's double the effort, double the difficulty, double. You've got to double the probability. It's it's not good if you lose too much, and that's why compounding is the secret. It's the secret to creating the wealth that you want. It's not through big wins. It's not through windfall type of wins, trading CPI, non-farm payroll with full leverage, being risky. That's not how you get rich. That's very short-sighted, and that's what the market aims to exploit. The short-sightedness of people on high leverage because they cannot wait. Okay. So yeah, that pretty much sums it up for this video. And yeah, I just want to quickly point out that if you lost 90% of your account and now you're down to $100, how much do you have to make to get back to 1,000? You have to make 900%. Okay, that's a lot. It's fucking it. Sorry, my language. It is very difficult to do that. Okay, so but what if you lost 5% of your account and now you are down to $950. How much do you need to make to get back to 1,000? I believe it is around 5.25%. So you only have to make 0.25% more. You don't have to make 810% more, or 50% more. Okay, you get it now? Pretty simple, right? So yeah, keep this in mind. Create something like this for yourself. I think it helps put things into a lot of perspective. And yeah, basically, I wish you luck on your trading journey, and I hope you trade safe. And I'll see you next time. Toodaloo.